Hey guys, welcome back to another week of Mortgage Matters in Minutes. We're here, sponsored obviously by Mortgage Specialists, and this week we're going to cover talking about buying new construction. And while we're not going to speak about the real estate side of new construction, we are going to speak about how new construction affects lending and/or maybe a few tips in 4 tips that you could think about when it comes to the home loan side of the world in dealing with financing of purchasing a new construction. So one of the things that we see often is when people get pre-approved or come in to get pre-approved, they give us a price of what they believe the new construction they are looking at. And a lot of times what I see happening throughout the process is that they may end up spending a little bit more money along the way just because of what's called the while we're at it. And the while we're at it could mean them in building the house, moving a wall, adding plumbing, adding electrical, changing things throughout the house. And so usually what I tell people is to add anywhere from 10 to 20% on that pre-approval to make sure that if there are those adjustments and all those changes, that you have enough money to get qualified, and also you're expecting that higher payment. As I know, a few $100s here and a few $100s there don't really add up very quickly, but they can when we get to thousands of dollars, and when that payment goes up significantly, to making sure that you want that higher payment. Number 2 that I would like to give as a tip is plan to spend more than you think. We talked about that, but plan on higher property taxes. Taxes on new construction homes have higher tax levies. And generally speaking, tax levies on new constructions are somewhere between 2.5 to 3%. Or on existing, tax levies are generally anywhere from like 2% to 2.5. So because of that higher tax levy and also the higher value of the home that you're building, the property taxes are much higher. And what I see consumers many times do is not factor enough in their payment for property taxes. Sometimes they hear from their friends that are building. Sometimes they hear from a real estate agent or builder or someone in the area that's just kind of guesstimating what the taxes are. What we do usually is take the tax levy and multiply that by the home price. So we know the max tax property taxes that you can have by the county is the home value multiplied by the tax levy. Does that generally happen? No, not always. But have I seen it happen? Sure, many times I've seen the county give a assessed value at the equal amount of what the value is worth. So property taxes on new build are significantly higher than property taxes on existing, and people generally don't factor that in for their payment. Number 3 as a tip is plan on closing delays. Obviously this last year, because of the massive increase in demand, it's been hard to get homes and hard to get contractors and hard to get supplies and hard to get equipment, you name it. And generally a new home may take 6 to 9 months to build. These days we're seeing closer from 9 months to 12 months and plan on those delays. I know a lot of people are excited to move in their house. They want their new house. They've made all the decisions. They're ready to go. But I can tell you what I see many times is that people get overstressed, get worried, get nervous, all ready to move in just because they were not expecting delays. And I tell most of our clients, plan on being up to 30 days late of the date they may initially tell you. So at least you have a little bit of wiggle room in there to cover and making your life a little less stressful. The last tip that I can think of to advise you on the home lending side is to plan for increase in interest rates, meaning when you get pre-approved, make sure you add 0.5% or 0.75% to that interest rate that you're factoring your payments on, because obviously none of us can control the interest rate environment, and the interest rates are always going to change. Are they going to go up from here? Probably, because we're at near all-time low interest rates. But I hate for people to see them getting pre-approved at a dollar amount of a home and a certain interest rate, and then both of those 2 items go up, which could change your payment hundreds of dollars. And so when we work on new construction pre-approvals, we do like to show clients the higher amount, or possibly, what is more worst case scenario when they're looking at new construction. I know people say and come to me, I'll never spend that much, or I don't want to go that high. And I can tell you much of the time they come back and I've already spent that, and then we have to back into figuring out a way to make that affordable. So today, those are just a few tips. 4 different tips there that we can think of in regards to new construction and how it will impact you as dealing with your loan and your payments moving forward. Obviously, if you have cash, that's the best, and we don't have to deal with making mortgage payments. But if we think about those 4 items, which is, factoring a little bit more, 10 to 20% more than what you think you may be building. Number 2, calculating more of a worst case basis for property taxes. Number 3, plan on closing delays. And last is base your pre-approval or your dollar amount of your payment estimate on interest rate increases. So if you plan for those 4 items, it can make your home building process a little bit less stressful, a little bit easier on your pocketbook when you do move in that house, and your next 10 or 20 years aren't so stressed because you did plan accordingly for some of those numbers. Thanks again, guys, for checking us out weekly here at the Mortgage Matters for Minutes. We'll see you guys next Tuesday at 3 o'clock, same time, same place. You can always check us out on our website at mtg-specialist.com or call us anytime at 402-991-5153. Thanks. Have a great day, you guys.
Mortgage Specialists. Driven, trusted, reliable.